Okay, so investing activities really just relates to one section of balance sheet, just relates to long-term asset. So any cash amount that you use to purchase long-term asset, land, building, equipment, machinery, any asset that lasts longer than a year, those cash outflow, the dollar amount will go into investing activities section. Okay, as opposed to purchasing, we may also be selling long-term asset. So if we sell long-term asset, receive cash immediately, that cash amount again goes into investing activities. Okay, again, statement of cash flow is only about cash inflow, outflow. So in this section here, if we did any trading on long-term asset that we used cash, not by signing off notes, not by doing other type of asset trading, but we actually use up cash or receive cash, that dollar amount goes into the second section of investing activities. Okay, so examples: acquiring long-term asset, using up cash; selling long-term asset, we'll be receiving cash. If we loan out money, remember long-term notes receivables. Receivables are a type of asset. So if we borrow money to other company, long-term, if the money is not due longer than, the due date for the money is longer than a year, then that money that we borrowed out, the cash outflow, also will be represented here under investing activities section. Okay, so as opposed to loaning out money, if we receive cash based on long-term notes receivables earlier that we borrowed out, this is also the part that we will add to investing activities. So if you really look at these bullet points here, these examples, the entire statement of the cash flows, we're just reusing information from income statement, from balance sheet. Okay, earlier we did an income statement, we do a summary of revenues and expenses, right? At the end we get to net income or net loss. In statement of retained earnings, we just move that net income, net loss, add beginning retained earnings, subtract any dividends, that will give us ending balance of retained earnings. Okay, I'm just doing a summary of what statement, each and every statement is about. Under balance sheet is the most comprehensive income financial statement. It includes asset section, liability, equity, and asset equals liability plus equity. And the entire statement of cash flows, we're comparing this year's balance sheet against last year's balance sheet to figure out any dollar amount differences, why is there differences, and specifically which activity did the company perform. So we're just looking at cash balance difference and trying to understand in terms of why is there, for example, a net balance increase, $20,000 of cash. Where did that cash come from? Did we actually collected more money from accounts receivables earlier or from notes receivables? Did we use up some money to purchase assets, so on and so forth? So we break down cash activities into three types. This is the whole purpose of statement of cash flows. Understanding the differences between this year's cash balance and last year's cash balance by breaking down activities that relates to cash into three categories. Okay, but we're just using any information that we summarized earlier in journal transaction and T accounts and balance sheets, just representing it in another way that everything that relates to cash goes into this statement.